Why is Bitcoin dropping today despite ETF optimism? Our BTC USD forecast next week sees a sweep of 64,400 support if the peace deal and hawkish minutes continue to drain risk appetite. 65, 740. A 460-point drop after 3 days of green, and yet the herd is still buying the dip. Right now, the daily stochastics are pinned at 95, overbought, and the Williams %R is at -3, absolute exhaustion. Meanwhile, in the background, the US and Iran are about to sign a peace deal, and the Fed minutes are about to drop a fresh hawkish bomb. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today. Let's get into it. This is your Bitcoin market verdict. My session bias is a fade. We are trading below the daily pivot at 66,318 and beneath the 20-day moving average at 66,812. On the weekly chart, the trend is a strong sell. On the daily, it's neutral but exhausted. Until we reclaim 66,800 on a 4-hour close, sellers control this tape. Write this number down, 66,800. If we break above that today, the entire bearish structure resets, and shorts need to cover. But if we lose 65,361, the next stop is 64,401, a 300-point trapdoor. The herd is positioned long, expecting a V-shape recovery. That's the liquidity the smart money hunts. The hidden opportunity is the short side, but only if you know the exact trigger. Write that number down now. 66,800 is the line in the sand. Let's go top down. And read the chart like an institution. The weekly chart paints a brutal picture. Price is well below the 100-week moving average at 73,370 and miles away from the 200-week MA at 79,203, a brick wall. The weekly MACD is deep in negative territory at -2,478, no bullish crossover in sight. That is the macro wind at our back as sellers. Now, zoom into the daily. Here's where it gets tricky. We had a neutral daily trend, and price bounced from the 65,361 support area, which confluences almost perfectly with the 5-day and 10-day moving averages around 65,130. That bounce looked promising, but look at what happened next. The stochastics surged to 95.8, classic overbought, and the Williams %R hit -3. When an oscillator gets that stretched on a counter-trend bounce inside a strong sell weekly, it's a trap, not a new bull run. The move is running on fumes. Now, drop to the 4-hour. Here's what most traders miss. We have a textbook hidden negative divergence. Price put in a slightly higher high on that 3-day run, but the MACD histogram and RSI made lower highs. Buyers are exhausted. The invisible hand is selling into strength. The key support is S1 at 65,361. A breakdown there opens the door to S2 at 64,401, which is a massive liquidity pull. Resistance sits at a 167,277, then a 268,235, but the immediate ceiling is the pivot zone 66,318 to 66,812. That cluster is where sell orders are stacking. On the 1-hour, we are already in a strong sell signal, with the MA20 sloping down. This is the canary in the coal mine. Here's the hidden divergence that most traders don't see. While Bitcoin printed green candles, the S&P 500 futures stalled at resistance and the VIX perked up. Bitcoin is the risk asset shadow. When equities sneeze, Bitcoin gets pneumonia, and that correlation is about to bite. Now, connect the dots to the fundamental driver. The last 24 hours changed everything because the U.S. Iran peace deal signing just erased a geopolitical fear premium that had been quietly underpinning hard assets. At the same moment, the Fed minutes reaffirmed a hawkish higher for longer stance. Rate cut bets are evaporating. This is a double kill for the digital gold narrative. Real yields are moving higher, the dollar is bid, and risk appetite is shrinking. Bitcoin has moved tick for tick with Nasdaq futures this morning, and ETF flows just turned negative. IBIT and FBTC saw net outflows yesterday. Institutional positioning via CME futures shows a build in short contracts concentrated around the 67,000 strike. The funding rate has flipped neutral to slightly negative on some major exchanges. That means the perp market is no longer paying longs to stay in. Smart money is de-risking. My 1 to 2 week directional lean is bearish to sideways. Target 64,400. The event that invalidates that lean is a daily close above 68,235. If that happens, we have a short squeeze, and we stand aside. But until then, rallies are sells. Do you think Bitcoin breaks 64,401 this week? Comment yes or no right now. I am tracking consensus and will highlight the most accurate calls tomorrow. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to hand you 3 exact trade setups with hard levels, stops, and risk-reward ratios. Screenshot these or write them down. Strategy number 1 is the sniper, the conservative play for those who wait for confirmation. We are looking for a breakdown and a 1-hour candle close below S1 support at 65,361. Not a wick, not a tap, a solid body close beneath that level. That confirms the liquidity grab and signals the start of the next leg down. Your stop loss goes just above the pivot and the 20-day moving average resistance cluster at 66,380. That gives you a 1040 point risk. Take profit 1 is the next support at 64,401, a 960 point move, nearly a 1-to-1 risk reward on the first target alone. Take profit 2 is S3 support at 63,444. If momentum accelerates, that's a 917 point gain, giving you a 1-to-1.88 risk reward. This setup is void if Bitcoin reclaims and closes above 66,800 on the 4-hour chart. That level is the structural invalidation. Respect it. The sniper, conservative, entry, 65,340, 1H close below 65,361, stop loss, 66,380 take profit 1, 64,401 take profit 2, 63,444 risk, reward, 1:0.92R to TP1, 1:1.88R to TP2 invalidation. Void if 4H close above 66,800. Strategy 2 is the active trader, the standard mean reversion fade. This 1 uses the pivot zone as the sell zone. Wait for a pullback into 66,318 to 66,500 on the lower timeframes. You're looking for a bearish engulfing candle on the 15-minute chart, or a long upper wick with declining RSI, confirming rejection. Your entry is on the break of that 15-minute candle low, somewhere around 66,200. Stop loss is placed above the recent swing high and above a 1, at 67,350. That's a 150 point risk. Take profit 1 is the 65,361 support, an 839 point move, giving you a 1-to-1.1 risk reward. Once that first target is hit, move your stop to break even and let the runner ride to take profit 2 at 64,401. The trailing stop rule keeps you safe and captures the full breakdown. This setup is invalidated if we get a 1-hour close above 67,277. That's the active trader's bread and butter. Type your BTC range for tomorrow in the comments right now. I want to see 65,300 to 67,200, something like that. Let's see who's aligned with the real move. The active trader, standard, entry, 66,200, on 15M bearish engulfing break below pivot, stop loss, 67,350 take profit 1, 65,361 take profit 2, 64,401 risk, reward, 1:1.1R to TP1, 1:2.2R to TP2 invalidation. 1H close above 67,277. Strategy 3 is the aggressor, high risk, for those who can handle heat. We are fading the intraday bounce right now, without waiting for the daily breakdown. The 1-hour trend is a strong sell, stochastics on the lower timeframes are still stretched, and price is struggling at 65,740. Entry at current market, 65,740. Stop loss is tight, at 66,150, just above the 1-hour MA20 and the immediate micro-resistance. That's a 410-point risk. Take profit 1 is 65,361, a 379-point move, near 1-to-1. Take profit 2 is 64,401 if breakdown momentum kicks in. That would deliver a 3.26 risk-reward. This is a screen watch trade only. If price breaks 66,150, you're out, no questions. Only take this if you can lose small and manage risk aggressively. The aggressor is the trap hunter, but it can trap you too. The aggressor, high risk, entry, 65,740, market, stop loss, 66,150 take profit 1, 65,361 take profit 2, 64,401 risk, reward, 1:0.92R to TP1, 1:3.26R to TP2 invalidation, break above 66,150 risk management pulse. Never risk more than 1 to 2% per trade. No positions through high-impact news like the Fed speakers later today. Stops are non-negotiable. This is how you survive to trade the next big move. The one level that separates a bull trap from a freefall is 66,800. As long as we stay below that, bears are in charge, and every bounce is a reload. Tomorrow, we are watching U.S. existing home sales and a speech from Fed Governor Waller. That could be the catalyst that triggers the breakdown through 65,361. If you want the full breakdown on gold and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.